Liz Young, I said the S&P above 3,300 for the first time. Is it time to buy or is it time to worry?
I am an incurable optimist, so not really ever time to worry that much. And I say this all the time, you must be present to win. So I always believe you should be in the market. I still think there are places that you can buy stocks. And I know Josh Brown, big friend of the show, I think he posted on Twitter yesterday, the market isn't ever due for anything. We shouldn't pay so much attention to the calendar. We shouldn't pay so much attention to the fact that it's been a long time or things have gone on for a long time.
You got to pay attention to valuation, though, right?
Not as much as we used to.
Yeah.
I don't even know. I mean, with monetary policy support and all of the macro tailwinds that we've had up until this point, it doesn't seem to matter as much. If we paid attention to valuation, value should have outperformed growth for the last 5 years.
What do we think about that statement? That's a bit of controversy maybe thrown into the mix today. Ed Yardeni, Bank of America today, says S&P PE hasn't been this high since 2002. Its PE to growth ratio is at an all-time high.
Well, I look at the forward PE. The forward PE is actually back to where it was in January of 2018. But we all know what happened. We then had a slide there. Look, this market's just been prone to these panic attacks. I've counted 65 of them. Not all of them are bona fide corrections being 10 to 20%. I think we've had six of those. But there have been a lot of little tiny ones along the way here with the idea, oh, my God, this economy is going to fall into recession. Let's get out. But I am watching valuation. Valuation is high, whether you look at a Buffett ratio, which kind of looks at the price to sales, basically, of the market. That is an all-time high if you look at it on a weekly basis, as I do. So I'm somewhat concerned about that. What I'm really concerned about is that the market's gotten ahead of earnings, the fundamentals. And I'm an optimist as well, and I agree that you have to be in it to win it, is another way to put it. But I would like this market to just take a pause here for a little while and let earnings catch up. And what's really good so far in this earnings season is in the fourth quarter. It looks like we had some pretty good earnings in financials, and the semiconductors are getting upgraded. So life is good.
Liz keeps it simple, though. Is it really that simple? As long as the Fed's around, as long as the Fed's your friend, all this fretting over valuation and how far stocks have come in such a short period of time doesn't matter.
I agree that it's simple. I mean, to me, it's momentum. We had some questions on the desk just a few days ago. If the banks don't perform, is that going to hurt the market? Are they priced to perfection? So we had some mixed earnings from banks. We had Bank of America, which didn't do so well. We had Wells Fargo. Well, I can't really count them because they perennially disappoint. Goldman was sort of mixed, even though I thought if you look through it, it's a good quarter. And then you had Morgan Stanley, which was good. So it was mixed. And guess what? The market didn't care. So I think the market can take those kind of, one-offs and still do well because people are looking for earnings to grow into the multiple. I'm not so sure that happens, but I think it's 6 months or so before you really have to declare on that. So right now, the news is good. There's nothing, and there's never anything that you can foresee that's going to cause the market to correct.
No, but the other day we're saying, okay, can the Dow, Jenny, close above 29,000? Now we're 200 points above that level. This market seems to be mostly unabated,
right?
Going up.
So here's where I am. I manage a dividend income strategy, which tends to do better in a bad market. So I like bad markets and I root for bad markets and I like volatility because it gives me something to buy. And this is kind of painful, right? And then I look at 18 times and I want to make a negative case. I want to say something bad about it. I want to come up with a bear scenario and I can't do it. But the primary reason I can't do it is yeah, I've got the Fed at my back. Yeah, earnings are growing. But beyond all of that, I have nothing else to buy but stocks. Right? Bonds are just not a great alternative for me right now. Private equity is not a great alternative for me. And so I look at it, and in my portfolio, I do have a lower yield because I do shift toward, I have a lower valuation because I skew towards value. So I'm not really at 18 times.